Hey everyone, back again for another episode, I guess, another viewing of That's Our Two Satoshis Live. Joined by Hassan. How are you, brother?
Good. How are you, Jeff?
I'm good. We're going to keep it short and sweet this week because nothing going on in the market right now, is there?
Nothing of note.
Can you remember a more boring time in the digital asset market than right now?
Not really.
I mean, there had to have been one. I can't remember one where there's been this little going on, like no events, nothing interesting, nothing innovative.
Yeah, just the hacks really have been taking front stage, and like short-term correlations with between digital assets and tech stocks.
Yeah, we've been talking about those correlations a lot recently. I think like all correlations we've seen over digital assets in the last 4 or 5 years, this too will pass. But certainly right now we're moving tick for tick. I think what's probably most interesting in digital assets though is in normal markets, and by normal I mean debt or equity markets. Um, Usually when times get slow and kind of get boring, people just get long and do nothing, right? Because they're clipping a coupon on their bonds or they're clipping a dividend on their stocks. Very few people try to short a dead or boring market because you just get crushed with negative carry, financing costs, everything like that. The opposite is true in digital assets. As soon as anything slows down, whether there's, just less Twitter buzz or less, gaming buzz or DeFi buzz, people immediately jump to just short the market. Um, why is that? Why do you think everyone assumes that no activity means down activity?
One, there's a perp for every asset out there, so it's just easier in our market.
Yeah.
Uh, but other than that, I just think people really think crypto is going down, and I don't think they realize that the people in the market right now, especially in the liquid market, they're kind of just holding their positions. They're not going to sell them down here.
Yeah, I think that's a good point. I think you look at the overall volumes of digital assets, or you look at the market caps, and you're like, oh, these are huge liquid markets. But the reality is, like, especially after a 4 or 5 month drawdown, or really you could say a 12-month drawdown, since the market really has gone nowhere since April or May of last year. Most people who are going to own assets just own them and hold them at this point. So the marginal selling pressure or buying pressure is coming from a very small sliver of the actual market cap. So you get these big pronounced moves, 10, 20, 30% that affects the overall market cap, but it's being driven by a very small percentage of the float. Most people are just holding, aren't going to sell, and the market's getting pushed around. So are you seeing that across the market, or do you think there's a lot bigger size going on than maybe I'm
No, I
indicating?
mean definitely. Like if you just look at like what to bring a reference point, like when Do Kwon and TFL, or I guess Luna Found Foundation, so LFG announced the $1 billion raise and then used that to buy Bitcoin. Only 250 million to $500,000 to 500 million purchases of Bitcoin moved the Bitcoin from 35 to 45,000 over a course of 3 days. So it doesn't take a lot of money to move this stuff, and you're seeing that.
Yeah, I agree. I think the market has stickier hands than you think, and there's people out there who are just saying, I don't care what's going on right now, I'm just going to own it. But you get a little bit of selling pressure, or a little bit of buying pressure, and it's just like a huge breeze coming through that's not going to market one way or another. And that's why we've seen this just insatiable chop really for, certainly the last 3 months, really since the sell-off ended on January 24th. I mean, the NASDAQ has gone nowhere. Bitcoin and ETH have gone nowhere. There really hasn't been a lot happening in the market, but you've seen these huge, big 20, 30% moves both ways. That gets the momentum guys all excited that we're actually heading one way or the other. But the reality is it's just treading water until we get the next big catalyst.
All right.
All right. So with that in mind, what I wrote about it, for those just watching for the first time, That's Our Two Satoshis Live. So we talk about what we wrote about in our blog, That's Our Two Satoshis, which you can find on ar.ca. Because there's nothing going on in the market, I didn't want to belabor the point and bore people to death trying to make something out of nothing. So what I did is I said, let's talk about what signals are we looking for in the market that gets us out of this malaise. And I went through 17 different risk signals that I look at, everything from Bitcoin and ETH specific signals like skew in the options market, to Bitcoin leverage, to miner activity, to overall macro things that I look at, everything from rates and the dollar and the VIX, to more idiosyncratic digital asset specific things like funding rates, as well as like fear and greed index and things like that. Before I get into some of the things that I look at, what are some of the things that you look at on a day-to-day basis that's giving you any sort of an indication of either overall health or strength or weakness in the market?
I like to look at the change in at the money volatility. That's a skew metric. So for things like that, and like how the daily option vaults, like their potential impact on Bitcoin and ETH vol, and Bitcoin and ETH vol are sitting very low. I think Bitcoin at the money was like 58%, which is very cheap historically. Historical Bitcoin vol is like mid 70 handle. So I think those daily option vaults are having an impact, and then I also think there's no one buying options, so that these market makers that buy the premium out of the vault, they have limitless offer out, which is further crushing vol.
So you're looking at that as a negative signal when vol collapses?
Yeah, I don't think there's too many. There's a lot of market participation from non-market makers. Like retail's not here, retail's not buying. So it's a good indicator. Funding rates are negative and have been persistently negative for 3 months. So that's not telling me too much either.
Yeah. It's interesting on skew, and for those who are not necessarily options experts, what skew measures in the options market is just if you look at the relative cost of buying a put or buying a call with the exact same move. So let's say if Bitcoin were trading exactly at 40,000, and you looked at what a 42,000 call looked like relative to a 38,000 put, if those two prices are roughly the same, then you have zero skew. But if it's skewed one way or the other, where puts are more expensive than calls or calls are more expensive than puts, that's where you get that skew. And what's interesting is in traditional markets, skew is almost always positive, which means that puts are more expensive than calls because most people are long biased. So they have their long bonds, their long equities, and then occasionally they'll hedge with puts. What's interesting about digital assets is that's not usually the case. It's actually usually, historically, it's usually been negative skew, which means that calls are more expensive than puts. And that's because we're all degenerates here. Everyone's looking for the home run. Everybody wants to buy the calls that go up 5 or 10x in a bull market. But over the last 6 to 12 months, you've seen a little bit more of that traditional kind of positive skew where puts are more expensive than calls. Do you think that's because people are making do you think that's because people are making bearish bets on the market? Or do you think that a lot of people are just long spot at this point and are trying to hedge out that risk?
I think it's both. I think even like crypto native funds are seeing the correlations rise, and they're in it. They're not looking to sell. The people are investing in these funds for exposure to the space. So they're just trying to protect some downside, because at this level, are you really selling Bitcoin? If you're selling it here, where are you saying it's going to go? Where would you rebuy? So yeah, I think it's a combination of just people buying to protect themselves and not that much volume anyway.
Okay, so let's try to get ourselves as well as others excited, because nobody likes a boring crypto market. I think that's obvious. What are you looking for that tells you it's time to go all in? What are some signals?
Stablecoin yields increasing.
Okay, so explain that.
There's a relationship between the leverage or the demand for leverage and yield on stablecoins. And generally, when the market's bullish, the yield on stablecoins increases because people are trying to borrow to farm or borrow to buy more Bitcoin or ETH. Right now, there's the rates on stablecoins have dropped, sub 4%, excluding UST, of course, but that's a structured rate. So like, I would like to see that. I would like to see those rates increase. I'd like to see the funding rate, doesn't have to like blow out, but like, not negative, not consistently negative like we've seen for 3 months. And then I'd like to see catalysts work on a longer time frame. Right now, if there is a catalyst for a coin, it's you're looking for 25% to 30% tops, whereas in good markets or healthy or bullish markets, I should say, maybe not healthy, the catalysts are good for 40 to 60% returns.
I also said the time frame matters too, meaning a lot of the events and catalysts that are working this year are working for, call it 1 to 2 weeks, and it goes up and then it goes right back down.
Yeah.
If you can see some of these catalysts and events have 3 to 6 months of buy pressure as a result of them, I think that's pretty indicative as well. So length of time may be more importantly even than the absolute return.
That's fair.
I agree with that. Do you think we're going to see any of these signs? I think, as I mentioned, for those who want to go read the blog that I wrote, I put 17 different risk signals in there, and I'd encourage people to go look at each one and give me feedback if you think some are more indicative of the market than others. But we've been toggling back and forth. Like I actually track these signals in an internal spreadsheet. Sorry, guys, can't share this one. But on an internal spreadsheet, I track all these signals every single day and look at which ones are more bullish, which ones are more bearish. And I look at that kind of bull to bear ratio. And it toggles a lot. Like right now, as of today, kind of bearish, right? 4 bullish signals, only 11 bearish signals, and a couple that are neutral. But a week and a half ago was the exact opposite. It was like a 5-to-1 bullish to bearish signal because everything I was looking at was full bull. So given that there's a lot of variability, a lot of volatility in these numbers, what do you think is likely to snap us out of this right now? When do you think? I think like myself, like you, like others in this market, we all think that there's been a turning point in the digital asset market where Bitcoin is inevitably heading to 100,000 or higher. ETH is heading to, if not 5,000, certainly, if not 10,000, certainly 5,000. There's a lot of bullish things happening, but the prices are not reflecting that right now. So, of the signals you're looking at, what do you expect to hit first?
I think just some type of resolution from the macro backdrop would help give confidence to investors. That's the primary thing. Like I think the the oil shock did a lot of the Fed's work for them because that takes care of like the demand side of inflation because now people feel poor because of the oil shock.
Mhm.
And then if we could just work through some form of resolution in Russia, Ukraine, which is obviously a huge X factor, no one has good insight there, coupled with as we move through Q2, the supply chain issues kind of getting resolved, and that would take care of the supply side of inflation. And once that's out of the way, I'm not saying we rally immediately, but like that just gives more confidence that digital assets are still not going anywhere, and we can start to resume an upward trend.
Yeah, I think it makes sense. I personally think, I think it's very low likelihood that we stay in an inflationary environment for a long period of time. As you said, the Fed is jawboning right now, buying time because everything from higher oil prices to lower real wages and things like that are sort of taking care of the problem as it is. I think it's more likely at this point that shorts just get tired. As you mentioned, these negative funding rates, that costs a lot of money, right? It costs a lot of money to be short when the market literally hasn't gone anywhere in 2.5 months. And you look at the stable coins. One of the 17 indicators I put in the blog was stable coin supply ratio, which measures the percentage of stable coin AUM relative to the overall market, which is another way of saying buying power, right? If all those stable coins were put to work to buy assets, how much of those assets are there to buy? And that's at all-time highs right now with that ratio. So I think it's simply when the shorts stop shorting because it hasn't been working, and they start to turn around and buy. That adds a little bit of momentum. That's what gets you maybe over some technical hurdles, which brings the momentum guys back. And then all of a sudden, the cash that's been sitting there idle feels FOMO and decides to get back in. And I think you can see a scenario here where even if we don't have full resolution in Ukraine, or we don't have perfect trajectory of inflation coming down, I think you can still see a scenario where we rally here just because there's no negative news, right? Everyone talks about there's no positive news, there's no bull case right now. There's no bear case either, right? Which is why we've gone nowhere. And it's a lot harder to stay short and pay all that money than it is to be long. So we'll see. We'll see if some of that bottled up demand starts to seep its way back into the market. And to your point, even a couple $100 million of just the Terra Luna Foundation Bitcoin buys jolted the market up 20% not too long ago. So it doesn't take a lot of money relative to the market cap of digital assets to send this market the other way. So we'll see. We'll be looking for those indicators that we mentioned. You can find Hassan on Twitter. Where can people find you?
At Hassan Basiri on Twitter.
Great. And you can find me at jdorman81. And obviously you can follow us at ARCA and check out our blog. We'll be back next week, hopefully with a lot more going on in the market and a lot more positive things to say. Thanks, everybody.
Thank you.